Welcome guys to Purpose Opinion. And yeah, I've been making this video. I'm gonna make this video after a long time. I took a bit of a break, and so today I want to talk about what's going on in the global markets, right? We have a recession that's I predicted that's coming soon, and I'm gonna tell you why the recession is likely the most likely outcome, and well, how you should trade in this environment, how you should manage your portfolio in this environment, and what you can expect to happen from Trump's tariff wars. And yeah, let's get right to it. So, first of all, if you guys haven't already, please feel free to subscribe to the channel. Uh, this channel is focused on helping traders understand the global economy, the global environment better, because only once you understand how the world works, you can actually make money from it. Instead of living in your own bubble, I think. Or, there's a lot of trading channels out there that are going to teach you all this, statistical analysis and all that BS. I don't follow that. I try to follow global economics and global politics because, in my experience, they give better indicators on how to trade. So, yeah, this channel will be focused on that. So, yeah, let's get right to it. So, first of all, let's talk about Trump's tariffs. So yeah, Trump has now imposed his tariff on all countries around the world except Russia. But what's the end game here? Well, the end game is Trump wants to increase the revenue of the US government to pay down US government debt. The more revenue that the US government can get, the lower the interest rate will be on the US Treasury bond. It's that simple an equation. If the interest on the US Treasury bond is lower, the debt financing cost is lower, and the more money the US government can borrow. In this case, borrow more money to give tax cuts to the wealthy, as what Trump is planning to do. So that's basically the gist of what's going on with Trump and his tariff. Now, what's actually going to happen, in my prediction, is the numbers will not add up. That revenue that Trump is expecting to come in tariff will not come because there will be a trade volume shock. Right. So the estimation of 7 trillion, $5 trillion in tariff revenue, I highly doubt they're going to get $1 trillion because what's going to happen is, look, first thing first, American middle class has been shrinking for the last few decades. They don't have the purchasing power anymore. And this increased cost of imported goods will just reduce the volume of imported goods. And so the $5 trillion estimate of tariff revenue is not going to come in. I think the most likely scenario is they're going to get maybe $1 trillion in tariff revenue at best. And Trump will use that $5 trillion estimate to give $5 trillion worth of tax cuts to the rich. But because they're not going to get $5 trillion in tariff revenue, that's just going to drive interest rates higher in the long run, in the medium to long run, for US Treasury bond. And yeah, because debt's gonna pile up because of the $5 trillion or $7 trillion tax cuts that Trump is expecting to give to the rich. So that's my prediction. And now, how do you position yourself? Well, I mean, a rise in interest rate on the Treasury bond in the medium to long term basically means the downside risks for stocks, US stocks, is higher because people will take money out of the stock market, put it in the bond with higher interest rate, higher yield. So yeah, I personally would not keep my money in US stock market right now or anytime soon. And so in the medium term, your money is safe in the US Treasury bond, but in the long term, it's not because the dollar will have to eventually crash. The debt will reach a point beyond return. It has already reached a US debt has already reached a point of no return. So the bubble will eventually pop. The dollar is strengthening right now. The bubble is getting bigger and bigger, but it will eventually pop. But in the long term, I think what will happen is money will flow out of USA into the emerging markets, into the Southeast Asian markets. China is a more matured market, so maybe not a lot of money flows in there, but definitely Southeast Asian markets, those are the emerging ones. Those stock markets will rally once the US stock markets, which goes into the decline, which they have already started to. And yeah, I mean, I also put Canada in the same basket, even though Canada is a mature economy. But I think money could easily flow into the Canadian stock market as well because of the vicinity to USA. A lot of financiers in USA also have connections in Canada, so it's easy to move money across the border. And yeah, just put money into the Canadian stock market. So yeah, my prediction is the US stock markets will be on the downside for the near term and long term future. Emerging markets in Southeast Asia will be on the upside. Canadian stock markets will be on the upside. And so that's that. And in terms of the recession, I mean, I already predicted, if you guys go back to one of my videos, I predicted a recession is on its way, most likely this year. And it's hard to give you the exact timing, but oil prices have already started crashing. And you have to understand, OPEC has kept tightening the oil supply for the last few years, ever since COVID lockdown was done. Ever since we were done with the COVID lockdowns, and there was a reopening of the markets, oil production was tightened by OPEC. But now all of a sudden, OPEC wants to increase supply. Why? Well, you have to understand, these people are advised by the best economists in the world. The economist that advises Saudi Arabia or the other rich oil kingdoms on whether to increase or decrease the oil supply, these economists are not going to come on TV and tell you the truth. They're not going to even come on TV. They're so highly paid, they don't have to come on TV. And if the only reason, the sole reason oil prices, oil volume will be increased by OPEC is because they're predicting a recession. So if you keep oil prices high, you're basically forcing the recession. If you lower the oil prices, you might delay the recession, if not avoid it altogether. And also, you're trying to get your money upfront, get your oil revenue upfront, right? That's the thing here. By increasing the supply of oil, they're trying to get the oil revenue upfront before the recession comes in, at which time the revenue will drop fastly in a short period of time. So that's what's going on in the oil markets. And how do you position yourself there? I mean, I wouldn't go long on any oil stocks of North America because their drilling methods are too expensive. There's no way they can compete with 60, $50 barrels in the long run, right? And yeah, so what do you do in that situation? I mean, the oil industry in North America has always been this seasonal demand and supply thing, and the issue of the price sensitive, right? And so like the only sector that usually outperforms the index during a recession is basic necessity or discretionary spending, something like utility. Utility actually does very well during recession. You can go through all the records you want. Utility, power plants, those companies do very well in recession. I can't give you the exact reason why, but any discretionary spending, the necessary spending, those sectors will outperform the index during a recession for sure. So yeah, other than that, I mean, the crypto market's on the downside right now because dollar is rallying. Once the dollar bubble pops, it will happen sooner than later. Once that bubble pops, the crypto market will rally. So I'm not too much worried about that. In fact, I'll go one step further and say that the biggest rally in the crypto market is about to come, right? That's for sure. When that rally begins, I think that's also the beginning point of the demise of the dollar because they're linked, right? You're exchanging US dollar for crypto. Uh, so yeah, and what else? I mean, there's a theory that Trump is doing all this tariff stuff to basically force other countries' central banks to lower the interest rate so that eventually the imported goods will remain the same price for American consumers. I don't see that happening because central banks of other countries, I mean, yes, there's a lot of countries around the world that are export oriented. Their central bankers have to focus on the export volume that they're exporting and all that. But they're not gonna do that at the expense of the local public. I mean, China is different. They're going through deflation. Maybe China's central bank can do that without hampering the local Chinese population. But a lot of central banks don't have the leeway to lower the interest rate because that will cause runaway inflation. It's one thing to focus on GDP growth and all that by lowering interest rate, making export cheaper and all that. But if you cause runaway inflation at home, you're basically risking a regime change, a government change, which creates more uncertainty rather than stability. So I think it's going to be a mixed message there. But like I said, the most likely outcome is America is going to import less stuff. And American middle class is already very poor, so I don't think they have much leeway to go anywhere. So yeah, that's it for that one. And I'll see you guys in another video.